Good morning, Fort Collins, Colorado. This is Patrick Sugup with Sugup Real Estate Services coming at you with your bi-weekly update of the Fort Collins real estate market. And, I think if you've even listened to anybody in the last few months about the real estate market in general in the United States and specifically Fort Collins and Colorado, you've heard it is as hot as it has ever been. And there's a lot of different reasons for that, but we'll jump in and kind of look at some data and then kind of extrapolate why maybe that is happening and some things to look forward to in the future and some uncertainty and X factors. So let's go ahead and jump into the data and start with just the weekly analysis. In general, there are as many homes that need to be coming onto the market. 89 during the last 2 weeks is pretty consistent with this time of year. Really, we should be seeing inventory increasing till the end or middle to the end of September, but as you will see shortly, that is not the case at all. One of the things that happened in the last 2 weeks is 121 homes have sold. And that's 60% more than sold during the last 2 weeks during this time in 2019. In 2019, the week ending in September 1st, or the 2 weeks prior, 75 homes sold. So the demand is extremely high, and things that could be causing that, like I said, we'll talk about here shortly. But the median sales price is $460,000. That was consistent for the last month, and as I also want to show you, it is consistently increasing has been increasing. So let's see here. Since 2017, our median home price has jumped from $380,000 to $460,000. It's been hovering around $420,000, $430,000, but with inventory so far down and demand as high as it is, it's been pressured to increase. And even with new builds, I was working with a client just last week, and we signed on a new build contract that's set to be completed in February of 2021. But we were told last week, we really started getting information that as of August 31st, their base price on their home is going to increase by $10,000 because of the demand for lumber, which could be attributed to the mill shutting down in May and April with COVID, and additionally, down in Florida, people needing OSB boards to cover up from the hurricanes. And in general, the demand for homes is just through the roof. So simple economics, supply is extremely low, demand is very high. So price of lumber has increased, which immediately impacts new builds, which will trickle through the existing home sales. Really, I don't foresee that base price decreasing. New builders, once they are able to set a new water level on construction, aren't going to do a reduction unless they're absolutely having to or have to. And with the demand that's currently happening, that's just not going to happen. One thing that I did see, and I have seen over the last couple of weeks, is that the average reduction has dipped. Generally speaking, the median reduction of $10,000, a price reduction on a home, has always been lower than the average. There's just been, more $1 million homes that have had much more significant reductions. There's less $1 million homes that are selling right now. And of the homes that are selling with the reduction, more $2,000 to $5,000 reduction. So just very minimal, because homes are generally selling for 99 to 100% of list price, meaning that when a property goes onto the market, it's listed at, let's say, $325,000. the final sales price will be within 99 to 100% of that. So really, really no reduction. I'm sorry, I didn't share my screen, but right here, the price reduction of $7,976. So a lot more $2,000 to $5,000 reductions, not as many $10,000 reductions. And what is causing the majority of the issues with pricing is going to be twofold: lack of inventory and interest rates being as low as they are. NerdWallet's got the average APR throughout the month of August of 3.08%. That's APR. That's not stated interest. That is APR. That is your all-in, including closing costs, title, everything that goes into the cost of that loan. And that's 3.08% for an APR. So, I mean, extremely low. I think you could probably get between 2.75 and 2.875 for an interest rate right now. But then in addition to that, inventory being at 170 homes on the market currently is 35% less than 2019. I just want to throw out some different numbers over the last few years. In August of 2019, there was 2.2 months. In August of 2018, there was 1.8 months. And in August of 2017, there was 2.3 months. Let's set the bar straight. Balanced market is 6 months. So we are already basically a third of what we could be in a balanced market, meaning that it's extremely favorable to a seller's market just because there is no inventory. Well, in August of 2020, we're at 0.9 months of inventory, less than a month of inventory on the market right now. Again, basic economics. Supply is extremely low. Demand is extremely high, especially with interest rates being as low as they are. It is a phenomenal time to be a seller. You are able to get the price that you want so long as you are relatively within that price range that makes sense. So that's an extremely important figure. Interest rates and inventory are driving demand and prices to increase. So some important things, some kind of X factors that we're watching. A good buddy of mine is over at CSU, and that's kind of kept me in the loop. But COVID cases at CSU, we were talking, and his actually prediction at the beginning of the school year is they were only going to last about 2 weeks, maybe a month, but definitely not longer than Thanksgiving break, obviously, because that's the plan, is to go to Thanksgiving break. But CSU is actually doing really well as far as coronavirus cases, which is huge for the economy in Fort Collins, because if these kids all of a sudden go home or parents pull their kids out of school, it's just not a good deal. And currently we're at 102 cases, which is not bad. And when you look at it comparatively to University of Alabama, which in the first 2 weeks of school have 1,000+ cases. I'm not to say that CSU could, all of a sudden dramatically increase, but currently we're doing pretty good. So our unemployment's at 7.4%. It's a little bit higher than obviously we want to, considering 5% is kind of just that pretty static number that we look at. But 7.4%, considering we just got through a massive pandemic, is not bad. I will say, boots on the ground downtown, it's active. People are wearing masks, social distancing, doing whatever we need to do to hopefully stay open, keep our numbers down, and continue on moving forward. So, and then I think we're just starting to get into that fun time where how divisive the world already is with the political realm. It's going to just get more so for the next 2 months. And I think historically, it's always a pretty uncertain time, but I believe it'll probably be more so now. And one thing that Congress is going to be coming out of recess here shortly in the next couple weeks, and what's on the table is another stimulus package, a $1 to $3 trillion stimulus package. The Democrats seemingly want more, closer to the $3 trillion, and the Republicans are leaning closer towards the $1 trillion. So you know, we might end up between that $1 to $3 trillion stimulus package, which could include another stimulus check or PPP funding. We just don't know. There's a lot of different moving parts on that. If anything comes about it, who knows? So, but we should see that here in the next couple of weeks to end of the month, hopefully. In general, again, the Fort Collins real estate market is extremely hot. If you're a buyer, even with prices increasing to where they are, we could look at some simple math and show you that it is still, or it is not still, it is more affordable to buy right now than it is to rent. That being said, there are some increased amounts of vacancies for single family rentals that I've been seeing. I'm kind of keeping my eye on that. But again, we did the comparison about 2 weeks ago, and we looked at a house in Meadowlark that you could rent for $2,100, $2,200, but you could buy the same house and be all in PITI plus private mortgage insurance for about $1,900. So $200 less a month with owning your own home. So it's a pretty amazing thing right now. And ultimately, hopefully we can continue the unemployment decreasing to a lower rate. People get back to work. I know it's a little crisp, and everyone's talking about a second wave or the third wave that we're in, whatever that might be for a coronavirus. And ultimately, hopefully we can stay open, keep businesses going, people gainfully employed, healthy, safe, alive. And one market that has done quite well to my benefit is the real estate market, and hopefully that continues to move forward. My name is Patrick Sukup with Sukup Real Estate Services. If you like this information, I'd really like for you to like or subscribe to my YouTube page as I come out with about a video or two per week to discuss the Northern Colorado real estate market, educational, investing, and all things real estate. So I hope you enjoy this. Thank you for watching. Again, this is Patrick Sukup with Sukup Real Estate Services. Take care.